Today, two key economic indicators were released for the U.S. economy at 17:30 Pakistan time: core retail sales and retail sales for August. Let's take a closer look at these numbers and analyze how they could impact the U.S. dollar against gold, crude oil, and major currencies like the euro, pound sterling, and yen. First, let's clarify what these reports represent. Retail sales measure the total sales from retail stores in the U.S. across all sectors, including automobiles. It's a key indicator of consumer spending, which makes up a large portion of the U.S. economy. Rising retail sales generally point to stronger economic growth, while falling sales may indicate a slowdown in economic activity. Core retail sales is a more focused measure, excluding automobile sales because they tend to be more volatile. By removing autos, this indicator provides a clearer picture of the underlying consumer spending trends. A healthy core retail sales figure suggests that consumers are continuing to spend on everyday goods, which is crucial for sustained economic growth. Now, let's analyze today's data. Core retail sales came in at 0.2%, below the previous value of 0.4%, indicating slower consumer spending growth in August. This slight dip suggests that consumer demand might be cooling. On the other hand, retail sales posted a minus 0.2% decline, significantly lower than July's 1% increase. A contraction in overall retail sales raises concerns about weakening demand, which could point to slower economic expansion in the coming months. A weaker retail sales report often pressures the U.S. dollar. If consumer spending is softening, it may lower expectations for future interest rate hikes by the Federal Reserve, which in turn weakens the dollar. In times of dollar weakness, we typically see gold prices rise, as gold becomes cheaper for investors using other currencies. For crude oil, weaker retail sales may indicate slower economic activity, which could mean lower energy demand. This often results in downward pressure on crude oil prices. However, geopolitical factors and supply constraints could balance or counteract this effect. Now, looking at euro to US dollar, pound sterling to US dollar, and US dollar to Japanese yen. A weaker US retail sales report may push the euro and pound sterling higher against the dollar, as traders may anticipate a slower pace of US interest rate hikes. Both the euro and pound could see near-term gains, although this will also depend on the economic data coming out of Europe and the UK. The Japanese yen typically strengthens in periods of uncertainty or risk aversion. A softer US economy could lead to more cautious market sentiment, boosting the yen against the dollar. In summary, today's weaker-than-expected retail sales data signals potential headwinds for the US economy. Traders should keep a close eye on how the Federal Reserve reacts, as any indication of easing monetary policy could further weaken the US dollar, benefiting gold and other major currencies in the short term.